We've reported extensively on trade tensions and on the outlook for interest rates. And tonight, we take a look at one sector that has been caught in the middle. Josh Lipton shines the sector spotlight on semiconductors.
Chip investors have been breathing a sigh of relief. Trade tensions between the U.S. and China have eased, with new hope that President Donald Trump and Chinese President Xi Jinping will get a deal done, because many chip companies such as Nvidia and AMD have significant exposure to China. It's an issue that Intel's new CEO recently addressed.
We're all excited by the progress that seems to be made in the discussions between the U.S. and China, because we think global trade is good for the industry in particular. So we think over time, as the thawing out of the dynamics play out, that it's going to open up opportunities.
Another reason for increasing enthusiasm, a friendlier Federal Reserve, which says it will take a pause from hiking interest rates, alleviating concerns that the Fed would slow the economy, which could impact demand for semiconductors. Then there's the outlook for the sector's earnings, which has been slashed, and that means it's now possible for these companies to surprise investors with better than expected news. But questions remain about what demand will look like in the months ahead. Analysts say that's not an easy call to make, given uncertainty about the health of the global economy. But some believe demand could be stronger than expected in certain key markets, like the data center and smartphones, and that's providing an investment opportunity.
From a chip perspective, the way you probably want to play this, probably want to own AMD for the data center side. You want to own Synopsys, which has exposure to all chips. And then finally, you probably want to buy the memory space.
But most agree that the biggest risk to the group is that a deal doesn't get done between the world's two largest economies. For Nightly Business Report, I'm Josh Lipton, San Francisco.